Good morning, everyone. I hope you're having a great day. Thank you for stopping by to join me on this daily GameStop technical analysis overview. A little late, but here just in time. I was so tired yesterday. All I could do was sleep. It was crazy. However, not much going on yesterday, right? We bled down so hard, and in our previous upload, we're talking about the potential risk reward for GameStop right here at the lower band of the one-day gap created by the bonds. What is like months and months ago now, right? We did gap down on that bond offering. Then we had our warrant announcement, and we filled that gap, which is great. But then we just slammed back down, staircase up, elevator down, as it always is, to the lower band of that gap. Now, as a technical trader, this is going to be a strong area of support. Now, of course, we could break down further. There is a secondary gap. Now, this is a gap up, not a gap down, from our earnings. We had really, really good earnings and the warrant announcement simultaneously, so we got that big gap up there. I do think it's going to be crazy unlikely that we fill this gap. However, technically speaking, if you do, you could take your entries in with a stop loss below, and I'm sure you'll be very pleased with yourself come Christmas time. However, maybe that breaks down, and we could see that lower trend retest as GameStop kind of likes to hold on to that. So, could be bad, but it probably is not going to get much worse than that, right? Unlikely, but still in the books, just starting out with everything bad that we could potentially see here. Aside from that, on our 15-minute chart, yesterday morning, we have a bullish order block formed on that market structure shift when we break up with some strength. However, we did reject the exponential moving average, the 200 here, forming that order block as we blow out the low in the afternoon, which is unfortunate. Basically giving it all back, but you know what? We're still hanging on to this lower band, right? And then kind of setting up a sell side liquidity here, which, again, after hours pre-market, I try not to pay too much attention to this because of the lack of liquidity in general. So, the levels are not super strong and will more than not break down almost immediately. So that's our 15-minute chart. Let's move out now to our 1 hour. And, we basically see the same thing, but just like we had a retracement to our bullish order block. Let me pull it up on the bottom here so we can compare, just to kind of teach you guys how these things act, right? Because they will act the same all the time, almost assuredly. We have this bullish order block here, right? And then we expand outwards and then retrace back to it, right? And we can see the same thing flipped here, where we have a bullish order block, right? Breaks down, and then we retrace back to it, right? And then we're expanding again in the original direction, which is bad. But if we, look at that on the 15-minute, we're going to probably use this block as support. Of course, if it invalidates, it goes from being a order block to a breaker block, right? Now, that's a totally different story. However, we're likely to re-challenge this just as we re-challenged this earlier, right? So yeah, aside from that, holding on to the lower band here as always, rejecting the 50, which is basically the same as the 200, just on a different time frame. So not much going on here, right? And then our 1 hour. Oh, that is the 1 hour. My goodness. Onto our 4 hour. Now this is where things really start to look grim. We've lost the 200, which is grody. That negative market structure shift going from higher lows now to lower lows is what that means. That's not great, right? That's pretty bad. We do have that bearish signal set, and that could lead to an extended downtrend, as well as this bearish breaker block, which is again not something we want to see, but it is what it is, and we have to address everything as it comes. Into our 1 day now. Losing this 200 is disgusting, right? However, we do have support on our original bullish breaker block, right? There was a bearish order block originally that we invalidated, and then found support off of this, right? So there's a lot of levels here for support. We have not only that, but again, that lower bound of the gap, and then that earnings gap here as well. So if we can reclaim the 200 exponential moving average here, I think that is going to show strength or conviction for me with these support levels. That this is probably, our new bottom. Yeah, sure, we can consolidate and maybe double bottom here in a couple weeks. I don't know. But it, is going to show, some conviction here for myself that these support levels have some strength to them. And I don't have really much for my indicators here today. These volume imbalances here are almost the same as a gap. It's a void or an inefficiency in liquidity, and the market makers are going to want to move the the price up to interact with some orders here that didn't get interacted with, because I'm sure there's some, right? And with that being said, we can move into kitty indicators here. And I did find this kind of interesting. So first and foremost, I think we're on the 1 day. We were kind of talking about maybe this is a new RSI Trendline. And we see the first signs of that potentially being respected. So can we find some support here in the coming days and validate this for ourselves a little bit further, and then try to maybe re-challenge that downward trend that we've set up and maybe break out from that, huh? Who knows? I mean, that's kind of what we're going to be looking for in the coming weeks and I guess month, because things move pretty slow. However, we do respect as well our 50 moving average, this red line here, as an additional level of support for us, right? So, this whole area is just stacked full of support. Let's see that hold and, kind of try to rebound up, hopefully sooner than later, right? And again, you'll see this massive volume imbalance here, right? A lot of orders that could potentially be filled. And, the market maker loves to do that, fill orders, match them, the buyers with the sellers, right? And then on the bottom chart here, I think our MACD is still negative, but has flipped, right? Starting to converge, which is great. So hopefully we can flip that into a bullish area, and we can charge upwards with some momentum. Comparing it to the S&P 500, we're basically at parity. We kind of go back here a little bit to where we're on trend. So I like to use it where GameStop's on bottom trend, kind of match it up there, and you'll see that we're so similar to the general market, maybe a little bit above it. I had it matched up earlier, perfect, but I think it was on the 4 hour, which you get a little bit better data on the 4 hour. The 1 hour chart doesn't take into account pre-market and after-market. The 4 hour does. So you can see, right, how similar we are currently to the general market based off of GameStop's lower trend line, right? Even here, if we can find that. Right, we're basically exactly where we want to be, matching up with the market, which is great. That means, we're not currently overvalued based on our bottom trend, right? We're probably right where we need to be. And then, if we can get up above that, that's going to be gravy. The PMO on the 1 day is still gross. However, we're going to be watching for the reversal here on the 4 hour. And then, we'll swing that to the 1 day. And can we rebound backwards and have one of these, whiplash resets for another run before the 1 day breaks down entirely, right? That would be cool. The on-balance volume is still holding up. No sell-off post-catalyst, which is good. And the options chain is kind of falling apart. Borrow rate is low. There's more shares out and about, and the rebate's quite high. So that has resolved itself, and we didn't really get to see what we wanted to there, unfortunately. We'll keep an eye on it. It's subject to change. To put to call ratios at 0.70, far more bearish than it was a couple weeks ago. And the 2027s, we're at 416,000 of these. So I think some of these shed off, like 50K of these might have already shed. We're going to start tracking that number day to day. I should go back to the last video and check it out. Just as this might be, an anchor indicator for us, right? Like when we see this bleed down, we can maybe expect a bit of a run, right? Again, just watching for that into the future, trying to find some correlation, if you will. And yeah, I think that's all I really got for you today. Warrant delivery was complete, trading with way more volume than it should have had. It should be in a liquid ticker, but it had almost 8 million on it, which was kind of crazy. Well, that's not right. Good gaming? Maybe. Hello, good game, right? That's crazy. That's my Magic brand. Yeah, so more volume on that than I'd like to see. We had a high of 5.75, low of 2.25 on my personal brokerage, within the first minute of trading. So you could have bought low and sold high really quickly. Not all brokers allow you to buy. So if you do plan on scalping these, which is whatever, you do your thing, make sure you can buy them before you sell any first, because you don't want to be selling them and then not be able to buy them back, right? So you can scalp these in and out, I'm sure. The spread isn't great, so if you can get out on a high, that's sometimes nice. On a low, unlikely, but you never know. Someone's sometimes impatient with their fill, and they're like, I gotta go up, I gotta get my fill this second, right? And then you can capitalize on that. But that's if you already know what you're doing, go for it. But just make sure that you can buy them back before you sell any, right? Because I'd hate for you to sell some warrants and then not be able to buy them back. With that being said, why sell any at all? Just buy as many as you can, right? I think a lot of people expect a lot from this. I personally don't necessarily. I like to be grounded. Some people said it was pretty cringe, but it works out better for me this way. That tempered expectation. We technically knew that we'd reject the gap fill on the 1 day, as a technical trader. That's it. And, of course everybody wants to squeeze from that, but it's like the reality of these things isn't always aligned with our personal bias, right? So it is what it is. I'm going to continue to be a pessimist always. But I'd love to be proven wrong by all means. With that being said, the people stacking these warrants up with the available funds to be buying them, I appreciate you because it is, a potential chance to call bullshit on the situation, right? Where, we see a lot of IOUs given out to people ahead of time, right? Because their accounts have the warrants before they've been distributed, which is fine. They're placeholders. I get it. But now you're getting fractional placeholders as well, which, again, you're not supposed to. And not only that, but they remain post-delivery day. So, what's going on there? That's a little weird. That means the brokerages are taking the warrants in their entirety and then passing them out, including the fractionals, which is interesting. So I'd love to see how that plays out when they start to be exercised, right? As GameStop is doing that directly. Whether or not you'll need to exercise them through computer share to confirm that real share is going to be something I'll need to consider for a few days, right? So, you get the IOUs from the broker, and then you exercise the IOU, and then they give you one of their phantom shares, which is another IOU. That's a potential, right? Maybe you get the real share from GameStop, and they are doing a total tally on it, but maybe it's just happening in the back, right? And then there's the computer share, which, it's got to be signed off by a GameStop agent, actually, which is fantastic. So, there's going to be some debate on this moving forward. Either way, I think that, if that theory was correct and would hold true, it wouldn't be, 10% extra, 20% extra. It would be multitudes, at which point it's really easy to call BS on it, right? So, an interesting year ahead. I'm super excited. Again, remaining level-footed, based in our technicals. And when the technicals line up, then we can kind of get bullish on it, right? But right now, the 4-hour looks brutal. The 1 day is looking like it's going to set up that way as well. Of course, let's remember that all these indicators are, of course, lagging, right? So they're subject to change as soon as volume comes in. You know, you're going to have that volume hit, then you're going to see the price react, and then the indicators react, right? So they do help tell a bit of a story moving forward, but things are subject to change in an instant, right? So some things to remember. I hope you have a good day, a good morning. Thank you all so much for stopping by. I appreciate you, and I'll see you soon tomorrow.